Hi, everyone. It really is an honor to be here. I learned a lot today, really a lot. And also from this fascinating presentation by the practitioners just then. And Song Wei, when he was presenting, I was writing to my colleague and say, this is the motivation of something else that we are doing. So thank you very much for organizing this and allowing me to be a part of this. What I'm going to talk about is low-hanging fruits in research, and it's about legal reforms, technology, and bank lending. This paper is together with Wang Yi, and there's a good reason for that because he's chairs, and if I flop, he will pick me up and do the presentation. I was in NYU, and I moved to Singapore in 2008. Then when I became the dean, I received BlackBerry, and I was very happy and keep it as a toy, and my wife was really upset that I would even play with it during dinner. Okay. Fast forward, what we have, everyone has a smartphone. And you think about a smartphone, it's shocking. All the things we have talked about today is somewhat related to all the technological development, and the smartphone play a very significant point. It is 900 million times faster than the Apollo 11 guidance computer. If you write out all the zeros, it takes a minute. So what we have is really, right now we have a digitized world. We heard a lot about that. We have all the networks, we just talked about the big tech, and all the analytics, which we keep on hearing about it. Then we have the machine learning, the AI, all this thing. You sit down and you think about it. What happened is that all this technology has changed the information environment and the distribution of knowledge, and they improve transaction efficiency. And anyone who read Hayek, his the market as the information process paper, you realize that Hayek predict all this. The market is really a big machine learning organism. And together with the digitalization, network data analytics, machine learning, they have changed every aspect of our world, which you have just heard. In finance, it changed our savings, spending, investment, credit, just on and on and on. And we see a lot of very powerful research, like this morning, and also the powerful application, like what we heard this afternoon. We see many of them, and the work is ongoing. I am a very old man. I am older than Song Wei, say, by 20 years. Imagine that. And so, I ask the question, are there low-hanging fruits? Like the banana that Li Yan is eating. Are there low-hanging fruits that we can eat and do something that really makes sense? And I think it does. If you think about what really we are talking about is the distribution of information, the democratization of information through our handphone, and then also making the world efficient. So the question is, can we identify some policy designs that really activate the power of the digital world, that allow clever distribution of information or efficient use of the technology that make our world better? And I tell you that we do have a lot of improvement we need to make in our capital market. And I'm going to showcase possibly two, but maybe at least one, of the very low-tech research that's built on this idea. The use of efficient mechanism based on the digitization that allow us to do something to improve the world. And if I have time, I'll go to talk about the distribution of information. So this is the paper by Wang Yi sitting here, and Peng Yu Chao is, I don't think he's watching, and Yang Fan and myself, we are doing this. I want to first make a disclaimer. I'm going to present some results, but the four of us, we have agreed that this week we are going to butt our head and do more and to ascertain that the results are reliable. So if we change our results, so forgive me, we may, okay? So let me just take a look at this. In the first block, there's all this literature. But let me do the machine learning for you. The literature basically have the following abstract points, highlight points. Improve the property rights will facilitate the use of fixed asset as collateral. Number 2, you raise the rights of creditors is a double-edged sword. They may gain market power, or at the same time, they may just provide more accessible loans. Then the third point is that the work shows that the change in the collateral law matter more than changes in bankruptcy law. And that kind of makes sense, because when you think about backward induction, when you solve the ending part better, the ex-ante contract will be more prevalent and can be better. Then, now, here comes the issue. We all know that in China, we have a court congestion problem. The judges have the KPI. They don't want to accept too little cases, because that's on the KPI. But they also do not want to have too many cases that come overdue. So they have to optimize. Okay? Now, so if there's some mechanism for them to resolve cases fast, it's good. My friends told me before the thing I'm introducing, they told me that they will cherry pick and find the right time to file the case. When they know that there's congestion, they won't file and they wait for another year, etc., etc. So there's a lot of congested court issue in China in solving bankruptcy problems. Then we also know that now this is quite prevalent, whether you're using Brazil data or US data. My friend Christian Muller in NUS have just published a paper about, we cherry pick the friendly courts, etc., etc. So now we have a court issue, jam the court and also court shopping. Well, maybe we can do digital technology. We use the digital technology, conduct online auction that will allow speedy and large-scale competitive bidding of collateral assets to very efficiently allow the conversion based on fair market value of collaterals into the lender's compensation. Example, we all heard of Evergrande, okay, Hengda. Hengda has a house at the peak of Hong Kong where I was born. And that was resolved very fast by auction, global auction. And I don't know who bought it, but anyway, at a very good price in spite of the Hong Kong housing slump. So this is a case in point about the exposed efficiency resolution can elevate the value of ex-ante contract. And it changed the landscape of lending. And this has happened in China. And this is, the dark color thing is about the adoption of online auction of collateral, and it originated from Zhejiang. That's Zhejiang, right? Do I pronounce it right? Okay. And you can see the spreading of this thing. So this gave us an opportunity to conduct an econometric study to look at the impact of this. So let's think about it. I failed to pay Wang Yi money, then Wang Yi will go to the court. In the past, he will cherry pick the timing and so on. But now the court will say, Wang Yi, come, do it. Because he knows that I cannot repay, the court knows I cannot repay, then fast forward, we'll force the judgment, and the court will go to conduct an auction. The resolution becomes a lot faster. Okay, and also the bidding will be nationwide. So we did some regression analysis to save time, a DID kind of thing. I have to worry about some of the problems with this heterogeneous treatment effect, etc., etc. But let's worry about it later after this presentation. What we find is that the appeal rate has decreased for contract cases after the reform, and the resolution took less time. We have empirical evidence on that. So based on that, let's think a bit more. The online auction avoid the court battles and so on, and is allowing us to convert the pledged assets to lender's compensation fast and efficiently. For the lender, that is a good thing, because the probability of bankruptcy is still the same, but the expected value and the timing for resolution is shortened. That means that the value of the loan is better. So there would be more ex-ante supply of secured loan. Okay? And then for the borrower, well, they would have access to secure loan, and maybe there would be greater demand. So based on this, a change in supply pushing outward and a change in demand pushing outward of only secured loan, then we'll check first and foremost, is this leading to a substitution away from non-secured loan? And we did find that. We do the regression, and we find that the non-secured loan has dropped, okay, in just the share, and the secured has increased. So we score. We find something. How come I cannot? Okay, so we find something encouraging. So then the next thing is about what happened to the interest rate, because both the demand and supply shift. So what happened to the interest rate is really going to be curious. And what happened to the POE versus SOE? We are in Shanghai. We all know that POE and SOEs are treated differently. And then we want to look at the Sharpe ratio, financial inclusion. So let's just carry on. We have the data from one bank. To save time, I just say that we have the time period. We have a good set of data that represent, by a bank, that represent 10% of all bank loans all over the country in China. So it's a very big sample. And the first discovery is that we find out that based on this DID result, the interest rate for secured loan has gone up after the online. That's the first row. And then when you look at, sorry, I misspoken. The interest rate for the non-secured loan has gone up after the reform because it's moving away from them, curtailing the supply. But the change in the secured loan after the online reform has actually turned out to be also positive. In other words, it looks like that the demand effect has dominated the supply effect. So let's move it further, and we find out that it's because many of the loans, you know, they face for the equilibrium rate, they face a higher interest rate for the lower rated type. So the well-rated, the same interest rate, but for the very poorly rated, the bank will lend to them. Why? Because now the collateral value is higher, so they lend, but somehow they charge a higher rate. This is what we find. The secured loan has an increase in interest rate, and apparently is driven by demand and of the lower quality. Then the delinquency rate, indeed, it also showed that the delinquency rate has gone up. By the way, I skipped one line. The change in the POE is a lot more significant than the change in SOE, which is expected. I see many of you nod your head, and so thank you. So the next thing is then what happened to the portfolio. We find out that the total lending has appeared to have increased, but the average loan size has decreased. And again, that's what you expect. If they are taking a risk, they're going to take a big risk. And who are they lending to? So they actually are lending a lot to the POEs. What we find is that the entry of POEs after the online reform has increased. So what I'm saying is that there is really a demand effect, but they are catering to the POEs and lend to them at a higher rate, but it's better. There's financial inclusion. Then I want to check whether the banks are getting a better off or not. The answer is yes and maybe. So we use the Sharpe ratio. I interpret the Sharpe ratio as that when it's high, the banks are lending to the same risk portfolio at a higher return. And if it's negative, I interpret the opposite. So when it's high, I say that the banks are getting a good deal after the reform. When it's lower, so I'm talking about the online reform line there. If it's negative, then the banks are facing something different. There may be competition, intensify the competition, make them take less. the Sharpe ratio will be lower for the same risk. So this is straightforward. And what we seem to see is that in the underdeveloped regions, the banks, facing not a lot of competition, they are having a better day. They lend more at a higher rate. But in the intensive competition, in the intensive areas, no, they don't. It's the opposite. It's the lender, it's the borrowers that are getting a good deal. So at the end, I have about 4 minutes and 40 seconds. So I think I may have time to go to the second one. So at the end, what we have, focusing on using the online auction, which is a kind of technology, we are able to raise the financial inclusion, and we find that banks may win or may lose, depending on the competition that they originally face. And for the POEs, they face a higher interest rate, but at least it's better than in the past that they are denied the lending. So now there's another thing I want to pitch, which is about the distribution of information. This is an accounting paper, but I will take 3.5 minutes to pitch it. It's about disclosed analysts' corporate site visit, audit adjustment, and quality of financial statements. We have this kind of thing in the US for more than 20 years. In 2000, the US won fair regulation disclosure. So an analyst visiting someone, the information has to be disclosed to the public. But how disclosed, we don't fully know. Fully disclosed, no, not really. So there's a lot, there are 170 papers studying on the impact of this quote-unquote fair disclosure regulation, and we don't know the result. It's very mixed. So I'm saying that, okay, what happened? Imagine that you are forced, after a site visit, the company has to fully, within 2 days, disclose all the information on an internet. Now, the platform. Again, this is how this is linked to Fintech. How is it done? So I'll show you. This is the disclosure requirement on the left-hand side, just the name and this. But on the right-hand side is something on the Wudongyi. Within 2 days of the site visit, the company has to disclose every bit of information on the website. Everyone can read it, whichever way you like it. Now, that is distribution of information. That creates something very nervous for the whole community, particularly auditors. So we would not see by the way, this happened only in Shenzhen. So I have an opportunity to do a DID. Shenzhen's disclosed versus those that do not disclose, including those in Shanghai and so on and so forth. And by the way, this one I'm very confident on the empirical result. We did a lot of fancy things, okay? So what we're able to show is that the disclosure affect the auditors. The auditors will adopt the information and at the end create, after the audit adjustment, led to very reliable financial statements. Now that is important in China. We know that there's a lot of difficulties in during the capital market and trading and so on. But having reliable financial statement is very important. You may ask me how I check the financial statement's reliability. We have standard ways, which we call the checking the discretionary accrual management, and also about restatements and so on. And so we did all this. And what we did is that we were able to show the triangle, the picture that I showed you. And the way we do it is that we run the DID regression. We manage the weak parallel trend problem. We manage the heterogeneous treatment effect. And in fact, I am telling Xiaohong that I'm going to send her the paper to make sure that I don't make a fool of myself. And then one more thing is that we also use machine learning to directly look at the relationship between the question and the answer by the analyst posed on the internet, and whether that affects the audit adjustment. We did all this. And everything is as robust as I can imagine. And I would absorb all the responsibilities if there's a mistake. Therefore, I appeal to Xiaohong, so please help me. But what's amazing in this thing, I work with a second-year PhD student. And I'm just so shocking. I'm so shocked that I throw all the questions to him. And everything he came back with in two weeks or so, and came back with the solution. Digest the literature for me. Here's my machine learning. He really digests everything and explained to me. So it's just absolutely a wonder that A, I'm happy that I'm back to research. B, I'm happy that I find the low-tech things to do. Just look at the policy design and how we can use the distribution of information and also the advantage of the technology that allow our capital market to be better. Thank you very much for listening.